it depends on the company. So from a sector-wide basis, I agree. I think there are some valuations that maybe you want to stay away from, just given some of the fundamentals. Though I would have to say the U.S. consumer is really being a nice boost to some of these companies in terms of their top line, and we saw that from Procter. But there are companies out there that I still think have value, right? And they have optically high multiples, but they have very high growth rates. I'm talking about Monster, Constellation Brands, Estee Lauder, which has a lot of exposure in China, and everyone's worried about China, but wait till next week. They're going to have a very good quarter. So there are opportunities out there.
How about these companies, though, that are stables of brands, like the Kimberleys, like the Procter & Gamble's, that are being disintermediated, by the way, by generic competition? Right. So Coca-Cola is really the only big cap name that we're recommending. And you know, new management has come in there, and you guys have talked a lot about it on your show on how much Coca-Cola has changed. So that's the one we like. Look, P&G, I think you have to give them credit. You know, for the first time in 7 years, they are gaining share again. So they show all of us that even a big company can deal with disruption, right? You just it takes some time and it takes some money, and that's what they're doing.
You got currency worries, you got tariffs, you got margin pressures. One or two companies withstand that better than some of the others?
Yeah, so the companies you want to deal with, like for instance, Estee Lauder really doesn't get impacted too much by the tariff situation. Okay, it's not like they're bringing components into the U.S. and selling them. So there's a company that's hedged on that. You think about a company like Constellation Brands; they really don't have much currency exposure. It's primarily a U.S.-centric company.
Isn't Estee, though, selling into China and other parts of Asia?
Estee,
I mean, indirectly, if China's slowing or if the trade war gets worse between the United States and China, couldn't that maybe indirectly impact a company like Estee?
Well, it could, and that's what the stock is retrenched quite a bit on that concern. But as we've done our work, what we're finding is that there is a cultural phenomenon on skincare right now in China, and Estee is really riding that wave. So when they report next week, you're going to see a very, very healthy skincare franchise. And we've seen some companies already in China that have sold off but have had good numbers in China, and they've sold right back up. So that's what I expect with Estee next week.
Why are the big aggregators of brands less favorably positioned, in your view, than some of these other companies?
Tyler, I don't know if it's aggregator of brand model. I think it's big company syndrome. A lot of companies get too big. Their infrastructures get too unwieldy. They can't manage nimbly. They lose focus on the local markets, and they try to manage everything centrally. We're starting to see companies make those changes now. For instance, P&G is, over the next 1 to 2 years, I would reckon that they'll spend a lot more of their resources in the local markets like China and Brazil and the Philippines versus trying to allocate everything from Cincinnati. So that's an example of a business model change that I think they'll go through that's really going to help them compete more effectively.